You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back. It is Friday. Time to wrap up your week talking a little bit of vol. Yes, it is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo, coming at you from the Options Insider Radio Network. And if you like vol and, hey, you're listening to this show, I have to assume you do, then you need to get your name in the hat for this coming Tuesday. The hotly anticipated vol Deathmatch 2.0 is popping off on Tuesday. Get on over to theoptionsinsider.com/pro. Get your name in there now. You want to participate in this. Trust me, it's going to be a banger. It's going to be the Flow Master. It's going to be versus Scott Nations. Two men enter. Only one can emerge alive, victorious. I leave it up to you to judge. In fact, if you're in there on the pro, you get to submit topics. You get to help determine the victor. Thumb raised, some lowered, like the Roman emperors of old. Theoptionsinsider.com/pro. Vol Deathmatch 2.0. Be there or be square. Gonna be a banger, if I do say so myself. And let's see who's joining us on the old program this week. First, let's find out, is he beaming in from the hallowed halls of University of Indiana? Is he beaming in from a Volatility Lake House near you? Or perhaps a Starbucks near you? Let's find out. He is the once, future, and present Dr. VIX, a.k.a. Mr. Russell Rhoads. Mr. Rhoads, welcome back to the show, sir.
I am beaming in from my office at Indiana University. I am drinking from my giant national champions Yeti and wearing all red and just happy about life here. And the VIX market is starting to act a little bit different, so I'm pretty excited today.
Yeah, we actually have some vol to sink our teeth into. And then also joining us from the hinterlands of Maine. We haven't talked to him in a little bit, and every time I talk with him, he looks more and more. He's on the progression towards his lumberjack / Grizzly Adams phase. I think Grizzly Adams literally wore that shirt. None other than the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. How go things on the shores of Maine, sir?
It looks very much like the frozen tundra.
Ooh.
So what in the summertime is a sparkling body of water, you could now actually cross-country ski over. It would be exciting, but jumping on some cross-country skis actually over ocean water would be a little freaky. But you could do it. The ice is literally 6 to 7 inches thick now, covering the coast. We have been in deep freeze, and this was actually the last day or two we got into the 30s. That's the first time in probably 5 weeks. So we've generally been living in a gigantic freezer.
Enjoy it. Enjoy that thick ice now, because the thaw is coming, sir. And you know what else is coming, listeners? It's the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down what the heck is lighting up the Vol tape this week and indeed today. And man, it looked like the fix was in, the die was cast. They were coming for this market, especially later on in the week. Yesterday, of course, a lot of blood red on the screens out there. Vol popping, Vol getting a nice lift. Uncle Mike shedding tears on the option block. It was a good time. Of course, earlier in the week, we had a rare midweek non-farms popping off. We don't see that too often as well. So that, of course, kept Vol a little bit juicier, a little bit frothier heading into the middle of the week. If you're like a lot of people, maybe you had a little Vol fade on post-Wednesday, and we didn't get that. We got exactly the opposite. We got Vol getting juicy, getting spicy. Then, of course, to kick things off today, we got a CPI number today, and that spooked a lot of people, apparently, even though it wasn't as hot as a lot of people expected. And we saw the markets selling off hard. VIX cash popping again north of the 20 handle. Got up to somewhere in the ballpark of the 22 handle in the cash. I'm sure Dr. VIX will take umbrage with that number because it was kind of an early session number, and he looks askance upon those outside of the trading hour. So I'm sure he will regale us with the exact apex for the cash today. But nonetheless, it was north of the 20 handle, looking spicy. And then we hit the 6,800 level in the S&P, a level we were threatening and breaking through a few times earlier this week. And then it just magically, I think Uncle Mike was waiting for that moment with his cabal buddies, and they started hitting that buy button. And we just rebounded off those lows earlier in the session. And then coming into the show right now, S&P is fully green, up 0.5% right now. Dow up a little over 0.4%. NASDAQ up 0.33%. So if you were looking in our poll yesterday, we did a flash poll. Is this another BTFD opportunity, or is it get the hell out of the way time? Started looking like the latter for a while there, and certainly opened up that way this morning, but now transitioning into yet another BTFD opportunity, of which there have been legion over the last, let's say, 5 years post-COVID. VIX cash getting all over the place, like we said, settling out right before showtime at about a 19.25. So still frothy, still juicy, up nearly 1.5 points, about 1.4 points from where it was on the last show. Our old pal Volley, a.k.a. Mr. Just the Facts Man at the Money Vol, a.k.a. the product of one of the combatants in Vol Deathmatch 2.0 next week, Mr. Scott Nations, at a 16 even as we kicked off the show, up 1.25 points. And then VVIX, the Vol of Vol itself, remaining frothy north of the power strike at about a 108. You know, if you listen to the option block and some other programs earlier in the week, we did get much higher intra-week. Looks like we topped out, I want to say 114, close to 115 Still pretty frothy, though. Anything above the par strike is certainly worthy of your attention. But around the horn we go. Let's go out to Mr. Dr. VIX now so we can get the official pronunciation for the apex for VIX Cash today. And then his thoughts on the somewhat weird week we had where non-farms were rolling out on a Wednesday as opposed to a Friday, and how that maybe gamed the vol system a little bit, and his thoughts on the vol juice we got yesterday and the vol annihilation we're getting today, sir.
Well, first off, today is not one of those days where the high occurred outside of normal trading hours. It actually occurred, but I still have an issue with it.
I just knew you'd have an issue.
Here is my small issue with it. So if you look at like the first 5-minute bar of the day, it's got a spread of about $1.50, and most of it is spiking to the upside, which typically happens when we've got kind of a volatile open and they widen out that bid-ask spread. Whenever they widen out that bid-ask spread, because it's the midpoint of the bid-ask spread that's used for the VIX calculation, but when that happens, there's a lot more room to the upside than the downside to widen the spread out. And what you end up with, we used to have these really goofy VIX spikes, and they've done a great job of doing away with those. But if at the wrong moment, they went and they calculate VIX every 15 seconds, at the wrong moment, if a whole lot of a sweep order hits and a bunch of offers get moved up very quickly, it can result in an unusual VIX level. But the intraday high is 2240, and that did occur in the first 5 minutes of the trading day. Probably, the opening volatility attributed to that. So yeah, I've sat here every week since I can remember, and my memory doesn't work so hot anymore, where I would talk about how we get a spike in the middle of the week, and then it comes back down. We got the spike on Friday instead, and it's thinking about coming back down, but not necessarily working its way back to the lows of the week, and back to a level that's close to where we were last Friday. That seems to be the pattern. We end up doing a big round turn, and maybe instead on the crystal ball, we should do the intra-week high instead of that, because there may be more use in that number.
It doesn't have the same ring to it. The intra-week high.
I know, but you know what I'm saying, because I have seen a lot of people trading the weeklies that get a bit opportunistic when we get those big moves up, especially on Mondays and Tuesdays. And there was very light weekly volume this past week, and I would attribute some of that to just how dead things were on Monday and Tuesday, and even Wednesday in the VIX arena.
Speaking of weeklies, have you dabbled in any of the new intra-week weeklies, sir?
No, but the very first day of it, I put out a tweet showing the percentage of each of the market's volumes. And I've noticed that a lot of other people have started doing that exact same thing, including the Flow Master. He has ripped off an idea from me.
He was talking about it a while ago, though. His defense, he talked about it to me at least a week ago, if not longer. So I don't know when you put your first tweet out.
The very first day that they traded, that Monday.
That's kind of a logical and analytic, I think. I don't know if
I know.
Left to their own devices,
no one would have you just keep defending him. You just do that.
He is battling to the death next week. I do need to show him some support.
Well, and I was wondering with the death match, since you just said it, like in the old wrestling days, they'd bring in a wrestler to be the referee.
Special guest referee? Is that what you're volunteering for?
Maybe.
Oh, we might have to get a shirt for that. That's not a bad idea. I don't know. Maybe might be fun.
Yeah,
we could do that.
I could do that.
Oh, that's now you're giving me all kinds of fun ideas. So if you want to see Russell in a sweet referee outfit, listeners, refereeing a vol deathmatch, get on over there to the pro while the getting is good. Mr. Rock Lobster, now we turn to you, aka the Grizzly Adams of the show. When you're not wrestling grizzly bears and skiing cross country across frozen oceans. Obviously a wild week. What were your thoughts as non-farms popping off in the middle of the week? Did that change your vol analysis at all? Your thoughts yesterday as we were really ripping to the downside, and then starting today, it seemed like the rip was continuing. It's that second leg that really spooks the markets a lot and really pops vol. And it seemed like we had that ever so briefly today, and then the rug was pulled yet again, sir.
Yeah, so there's a couple of major things. Hopefully, you have the gladiator theme somehow in the background of your death match.
Non-licensed gladiatorial music, perhaps. Yes.
Yes, yes, yes. Thumbs up, thumbs down. Also, I thought hell froze over because Oatly is going to make money in 20.
Yeah. How wild was that? A positive
again,
earnings
stock
announcement
down
from
and then
Oatly.
stock down.
Well, yeah, of course.
So Oatly is at least still living up to its worst stock in the universe.
It's back up to like $12 now, though, so it's looking better.
It is. It is. And so besides those two big, the non-farm. So here's what I saw. Like, okay, most of the headline news was, I would say, positive. You know, there's some arguments about one way or the other, but I think there was a much bigger thing that's still happening. That's dwarfing everything else. So the non-farm payroll is basically whatever job gains we're getting is from outside the government because the government has been losing jobs all year. So there's that there. Let's just say this was weeks of narrative shift. So number one was the government at least is hiring less people. So I would say from a payroll point of view, that's a net positive for the economy. Inflation came out today and it's okay. It's not super low. It doesn't seem to be super high. I don't believe any inflation numbers anyway, but at least the trend is not as bad as everybody thinks. So that's the second positive. And the Fed, you know, might lower rates again. We have a relatively, I would guess, normal type Fed chairman, whatever that means, Marsh. So these are all what you would normally associate with like more positive economic developments. in general. But stocks could not hold on to their high. I think the biggest thing last week was the AI good for everything bubble burst pretty hard. So I have the Mag 7 up on my screen right now, and they're up with the Mag 7. Most of the Mag 7 stocks are down. That is narrative one. Second one is AI is going to kill all software. That narrative kind of started to hit. Also, the market was assigning the Mag 7 a very high multiple because of the growth potential of AI and all this stuff. And then the reality of their earnings, which were enormous. By the way, in this earnings cycle was enormous, which was at all-time highs. Companies making gobs and gobs of money. But you know, they have to spend, and I think we joked on the show on Monday, they have to spend the GDP of Europe on chips and technology. And the payout is far from certain, right? You know, Claude launched their, you know, what are their Vibe apps? So nobody's, you know, everybody's going to make their own app now and do whatever. So if anything, what happened this week is the future became a lot less certain around AI. And what that did is that made that big cozy trade, the Mag 7, very difficult to hold on to now. Microsoft is off 20%. Meta is down a huge from the top. Google is now down 10, 15% top. Amazon is down $50. So what is that? 20%. So the only stock I think that's even remotely close to highs are Apple, AV, Broadcom, which is Mag 8, down $100. So the point is that what used to be a sure trade is now not a sure trade. The market has to do this kind of it adds some volatility because we're trading at close to all-time highs. VIX is trading, you know, 18, 19. That's about 5 points more than normal. As I remember it. So it is a transition market, and look at software stocks. They took the multiples out of those, destroyed them. So it was I think it overshadowed everything. I think that narrative is still operating a large degree. And you know, what does the market look like when you have a multiple compression in the Mag 7? Mag 8 will throw in Broadcom in there. If the multiple goes from 30 to 20 or 30 to 18, where's all that money going to go? So I find it I think that at least I think that's a big driver of the vol. Bitcoin getting cut in half is probably another, just because it's a volatility measure or a volatile instrument. MicroStrategy, of course, is now underwater on their holdings, and somehow they're going to finance them.
But there's no concern at all from the top brass of MicroStrategy. They had very, very positive on their earnings announcements.
Exactly. Oh, just roll the debt over.
Yeah, we got a couple of years till that debt's due. We got a couple of years for Bitcoin to catch up.
So anyway, these are what I would call overall the headline news. Headline news, economic news has been pretty good. 2025, remember we had the tariffs. We had a lot of kind of, China, this, that, and now that those things have sort of settled to some degree. Of course, government spending is still an issue, but that was around last year and the year before. But now we have stocks, relatively high prices, but VIX does not like really going below 16. So I'm just saying that's what it is. And I've got my students asking me a lot about zero DTE. Is that really keeping the VIX higher? And to be honest, I would guess liquidity providers probably do a lot of option buying in the zero DTE stuff, which gives them pretty much unlimited gamma. So I think on balance, I don't see how that would make VIX higher. Anyway, Russell can chime in on any one of these things. Those are my observations. But SPX going up now, I think will happen outside of the Mag 7. In other stocks, companies that make things that will have AI efficiencies and all that kind of stuff. And we should see a broader base but lower vol rally than we have had in the past. But again, that's my opinion. It's just one man's opinion, and he's a crazy old man that's ready to just go knocking trees down every day in his old age. So that is what I observe, but also I love doing the show. Russell has such nice and timely VIX nuggets that he pulls out every once in a while.
Oh, Russell, didn't you have some correlation data that when the last time Andrew was on that we never shared with him?
Well, I think I told him offline somewhere
okay.
that what he was saying was true. But yeah, I did a academic just quick video talking about how 2025 was a bit different than other years. The correlations were very different. The relationship between the European volatility and our volatility was very different as well. I got to find that power. It's been like a month now because Andrew hadn't been coming back. But what he was anecdotally observing, I quantified big time and then forgot it. So, well, that's just how it works with me.
Anecdotally observing is losing money on VIX puts I never sold. That's what the anecdotal.
I work and on stuff, and then I have to look at it again to remember it because that is how I live my life now. Well, you can only imagine how much I get away with not doing at home.
Well, you keep digging, sir. We will dig into a little bit of this vol curve for this week, listeners. Going out to the land of VIX futures. No surprise, we were seeing them up ever so slightly to kick off the show. That Feb future still up about 2/3 of a point, so retaining some of that juice that it got earlier in the week, indeed earlier in the session. And of course, March pretty much flat, up almost a little less than half a point out there for March, so about 0.4 of a point. And you go all the way out to October, which is getting perilously close to those midterms everyone's talking about. That one is almost literally flat, up about 0.05 points. So not a lot of evolution there net on the week. I think we got a little bit of time to watch that. I think that was one of our questions, actually, from Mr. VIXologist on our Pro Q&A this week, a frequent guest of this show, which is, when do we expect to start seeing that election vol premium make its way into the VIX futures? But right now, a whole heck of a lot of not much going on the vol surface, at least compared to last week. Mr. Rhoads, A, did you find your data? And B, anything catching your eye in the world of VIX futures, sir?
I did find my data. I got like 12 slides.
Ooh.
And VIX futures, they continue to stay at somewhat of a premium where they continue to be worried about what's going on in the world. When we've got the spot at 1922, and you go out to March and you've got it up pretty close to 20 right now. Not a gigantic premium, but still a premium. And I don't watch it as closely as you guys do because I have to go into the classroom and all that other kind of crap. But I don't think did it get inverted on any of the spikes this week, or was it inverted early this morning? I don't really know. But
I have to guess this morning. Maybe I didn't have a chance to go look.
Maybe for a second, but we don't invert. We never invert when we get these spikes. That's the midweek spikes. And I wondered just with it being a Friday and all, if maybe it would be a little bit different. February goes off the board next week. There's a 40-cent premium there right now. I severely doubt that those 16 puts going to be paying off this time. And then March is just a little bit higher. I don't know where March is relative to the next Fed meeting. It might be before it. And then we're in the 20s and somewhat flattish. Not as flat as we have been with, we'd have the front 2 months up, maybe 2 points in 3 months 2 points and 3 points respectively. Sorry. And then it was like everybody going farther out from the third month on was all within a 1 point range. It's more like a 2 point range now. And I don't know if that's because the long end of the curve is September, October, which is, I'm not saying that it's true, but a lot of people are more concerned about the financial markets going into the fall just because some of the big sell-offs we've had have commenced at that time of year. So the curve is a little bit, I hate to use the word steep, but it had been so freaking flat on the long end. It is a bit steeper than you would expect on the long end, especially, with VIX up around 20. So a bit more of an angle there than I would like. On the data stuff, real quick, I'm going to look at my summary. The correlation was the closest it had been in 2025 to -1, going all the way back to the inception of VIX. And the average of 1896 for a nice bullish year is one of the highest average VIX closes in a double-digit year that we've got. And
Dude, can I have that deck? Can you send that to me?
Oh yeah, absolutely. I'm more than happy to. And like I did a thing where I did closing handles when we did all-time highs, and the majority of them are closing with a 12. The all-time high closing handles in 2025, whenever we're making all-time highs, was 13, 14, 15, 16. A little bit higher than what you're used to. So there are lots of little differences. Yeah, I'm more than happy to share it with you. So there. But yeah, the 2015 was the year that was very, very close to 2025 as far as the most inverse correlation. They're practically a tie. You have to go out 3 decimal points to see which one is slightly more negative than the other one.
3 decimal, but we only go to 2 here on the network, so that is a tie.
If it were crystal ball, they would have tied.
Yes, that is true.
How's that?
Mr. Rock Lobster. Any response to that? And B, what was catching your eye in the world of VIX futures this week?
I agree with Russell. Also, and I think 2026 is following the same vein. My thought on it is still like, why? And I to be honest, I think the Sith Lord under the thing is just like crazy government spending. The market can't quite figure out what to do. Everybody knows it's not sustainable, yet the knuckleheads don't do anything. And I think, but AI is here and companies still grow, like this binary effect on markets, like the growth, but they don't want to get hosed if the government can't pay their bills. So I don't know. It's just a closet theory. But as far as that goes, yeah, I think we'll call I have a high contango. You've got like VIX close 18, 19. and we're still in contango. So to me, that's like, again, expecting short-term vol lower, but long-term vol, like the story's not over. Still, the market has no trouble taking those long-term vols up. And for the viewers, like, why is this significant? Okay, because liquidity providers have to buy that juice. Like, they are option buyers and they take vega risk when they buy it. Like, that's real money. So for vol to get up and stay up, there's demand. There's demand at big prices like that. Those 30-day prices are big at a 20. So, so those are SPX option prices. Remember, like, somebody's got to buy that stuff, and that stuff decays. And right now, a liquidity provider, they're running higher vols for longer, and they're cool with it, which means there aren't a whole lot of natural sellers around volatility with SPX near 6,900 and VIX at 19. Like, nobody wants to sell a 7,000 or a 5,000 put anymore, or a 6,000 put. They're like, yeah, no, we won't do that. It's not happening. Like, and I remember sitting in the SPX and buying out of the money puts, and the market, was just kind of grinding up. But man, they sold those things and they just killed the skew. I mean, this was a long time ago. It's the same effect, except SPX back then I think was 400, not 1,000 years ago. But it's the same effect. But I don't think there is not that downside put seller right now. Size, that's part of the reason why. Holding that bag. It's a big bag here.
There's a big bag indeed. Let's see how big the bag is out there in the VIX options market this week, shall we? It isn't a banger day. Yeah, we have one of those little dust-ups, nice little whipsaw before the start of the show. That's usually going to gin up some options volume, and that is the case. VIX already threatening 750,000 contracts, 725 on the tape right now. That would already be blowing past our ADV of a few weeks ago if that ADV hadn't been skyrocketing north pretty much every week. Yet another indicator that something is up, listeners. The game is afoot. When I always say, when VIX is threatening 1 million contracts a day, something is up, and we are almost exactly at that point now. The ADV is 993,000 contracts for VIX, up another 70. That's up 173,000 in the last 2 weeks, another 73 this week. Just wild, wild stuff. And again, once I break down the week, you'll see why those numbers are getting so spicy. But before we get there, let's go out to our top 10. We've done a lot of living. We've hit a lot of strikes in VIX land over the course of this past week. So we have seen a little bit of a dust up, a little bit of a shake up in our top 10. We are now at 9-1 calls over puts. So if you were hoping that second put would stay in there, maybe a third would sneak in, the answer was no. Puts this week, at least for right now, are dead. Maybe they'll come back in fashion and in vogue by the end of the session. But right now, not the case. Number 10, $1.77. That's what it cost you to break into the top 10 this week. That gets you to the March 20s. So right away, we're establishing a nice baseline. The 20 strike, usually seen by a lot of people as a kind of a very psychologically important level. That's where they start sitting up and paying attention when VIX cash is hanging out north of 20. And the March 20s kicking it off for us, $1.77. We did vacillate around that strike quite a bit, through it, below it, up through it again, now back through it the other way. So we've done a lot of dancing with the 20 handle this week. Hence number 10, number 9, $1.84 of the March 50. So right back to the fun, lest you think there's no fun in our countdown. There's tons of fun, including number 9, $1.84 of the March 50s. If that's a wee bit too far out in time and a wee bit too far up the chain for you, allow me to present number 8, $1.91 of the Feb 47 halves. Yes, then number 7, we're back down to a, dare I say it, reasonable strike. $1.93 of the March 25s. Number 6, 205, right back to the fun of the Feb 50s, 5-0s. I love that the 47 halves and the 50s are both open for size in February. Always brings a smile to my face. Number 5, 205,000 of the, dare I say it, reasonable Feb 20s. Number 4, 281 of the March 35s. Now we're starting to get back into some interesting territory. If that's a little bit too far out in time for you, how about number 3, 291,000 of the Feb 35? So pick your 35 poison, listeners. Number 2, we finally found him. We found our Waldo this week. There's only one, and it's 294,000 of the Feb 16 puts. Somehow, these 16s and the 15 halves and that stuff still lingers. It's not a 17 put. It's not an 18 or a 19 put. We certainly played with all those strikes this week. Nope, it's a 16 put at number 2. And then the big dog out here again this week, 374,000 of the Feb 25. So those are still hanging out at the top spot on our list. You know, we had some upside in vol. If this was this straight long 25-35 vertical, you might think maybe they monetized some of it, but once again, we have not seen a ton of evolution on that position. It really just seems to be continuing to pile in. But now, speaking of piling on, let's get to that right now. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
I've been missing that song. I've been jonesing for that tune, Mr. Dr. VIX. What you got for us this week?
I'm always jonesing for that tune. So Monday, VIX at 1865. This is the very first trade of the week. Kind of like this one. It doesn't look good right now, but I kind of like this one. Bought 265 of the February 25th, skipping the 18th, but that's a standard expiration. 20 puts. They paid $1.93, so 1807 or lower at settlement. You know, you could that could easily be a double.
That could be a banger. Yeah.
Yeah, I mean, it could easily be a double if we get down around 16. I mean, it doesn't look good right now, but who knows? Just the way we're basically in a 15 to 20 range,
pretty much.
And if you're playing these things, you gotta hope that we're at the lower end of it around settlement.
If I was doing that though, I would sell a 16 or a 15, something else against that. I feel very uncomfortable shelling out nearly $2 for anything in VIX land right now.
I know that when I was at SIBO, one of the things that we would do is we would tell people to never leg into verticals. I don't agree with that here. If I were to do this trade with VIX, and VIX was at 1865 at the time, the way the market's been behaving, you're going to be, if it continues to do this range thing and give us a few spikes each week, you're going to be able to leg into the lower one at a lower price.
Yes.
At a better price. So I would also want to, but I would, especially because VIX was in the 18s as opposed to the 16s or 17s. And then a little bit later in the day, and I'm thinking they wish they had done this earlier, with VIX at 1704, somebody sold 250 of the February 11th, 16 calls for $1.33. They bought the 19 calls for 21 cents, which gives us a credit of $1.12. Break even at settlement of 1712. Settlement was 1682. It looked like they held on to it, so they made a 30-cent profit on that. Tuesday, very little going on. I almost, I came darn close to saying nothing happened Tuesday, but I kind of like this one. Somebody with, and the reason I like it, it matches up with the music that you play. There's always a clown show trade in the weeklies, and here it is. Late Tuesday with VIX at 2033, had a seller of just over 900 of the February 25th 19 puts for 79 cents. So it's almost like they were selling them, trying to salvage something. VIX is it reverts to the mean, guys, and you got a couple of weeks left on that one. And this appears to have been an exit. So I doubt they made a profit on it. I'm sure they're not particularly happy that they did it. Wednesday with VIX at 1751. I've got two trades that were done at the same time, and I don't think they're a spread with each other. They may be, but I would never do these two together. First off, with VIX at 1751, somebody sold 100 of the February 25th 19 puts for $1.10 and bought the 17 puts for 23 cents. They took in an 87-cent credit. As long as we're above 19, they can keep that credit. Also on Wednesday at the exact same time, Somebody bought 100 of the February 25th 18 calls, bought a call with a strike lower than those puts that were sold. That's why I think it's not that these are separate trades. And then they sold the 23 calls. They did all of that for $1.26 cost. So they've got a bullish trade here that does okay from 1926 and higher. But then on Thursday, I mentioned this selling the 19 puts and buying the 17 puts. The exact same trade occurred with VIX at 1935, but an exit. Somebody bought the 100 of the February 25th 19 puts for 85 cents and sold the 17 puts for 15 cents. That was a 17-cent cost to get out, or 70-cent cost for that execution. If that happened to be taking off that Wednesday trade, they would have made a profit of 17 cents.
All that for 17 cents.
Well, and then what I started thinking was, are you kind of, I hate to say gamma scalping on this, but are you putting these on because you see the zigzags in the market and you intend on monetizing each of them at some point? Like, if we get a run up to 21 or 22 and they can take something out of this bullish trade, maybe they do that as well. So I don't know if I don't know if those two were together or not. And then just because I love the clown show music, with VIX at 2066 to 2117 this morning, somebody bought 233 of the February 25th 15 puts.
Man, 15
for a nickel.
puts.
For a nickel.
I wouldn't hate that. I may have put a few 17 puts in my back pocket heading into non-farm, so 15 wouldn't offend me. But
15s,
that seems like a bit of a bridge too far to me. But hey, who am I to naysay such things?
They got a week and a half.
I love so many of these trades. It seems like they fall into two categories. It's slinging a whole bunch of contracts and a whole bunch of legs to make 12 cents, or it's somebody loading up on an extremely expensive options, also seemingly kind of head scratching. There's a lot of head scratching going on in these, which again is, I get the point of the segment, but also just kind of, you did all that for 12 cents? And then someone else has paid $2 for these ridiculous puts. So yeah, we've got all stripes going on in the VIX weekly options. Let's see the regular options, listeners. Let's see what stripes we got going on. Like we said, today threatening 750,000 contracts already, so pretty hot already out there out of the gate. The hot option today, you got the March 30s going up 55,000 times out there. Looks like there's some, also they got a 2550 going up out there today as well. So March pretty hot out of the gate today. Number 2, 44,000 of the Feb 18 half puts. So there are some meaty puts going up. If you're wondering, these are about 35 cents. These are going out next week, so not much time left on those. 41,000 of the Feb 22s. Number 4, 35,000 of the March 25s. And number 5, 28,000 of the March 50. So again, that March 25-50 ratio fun to the upside. Thursday, 1.37 million contracts on the tape. So Thursday, definitely a banger. The hot option on a hot day, 65,000 of our old pal, that psychologically important level. The Feb 20s. That makes sense to me when I see a lot of action around the 20s when we're vacillating around. Sometimes these funky strikes get in there. Makes a lot of sense when we're blowing through strikes and the 20s are lighting it up. Number 2, 65,000 of the Feb 18 puts. Number 3, almost 61,000 of the Feb 17 puts. Number 4, 46,000 of the Feb 25s. And number 5, 46,000 of the Feb 22s. So all Feb, all very high bang for your buck type trades. We asked you yesterday, the Feb 20s were the big dog. They were trading for an average price of 90 cents at the time. And our audience couldn't make up their mind. They got split right around 31% each to sell them or buy them in a spread. And then 18, almost 19% each wanted to straight buy them or sell them in a spread. So I guess that's what makes a market. Listen, we also asked you yesterday, we were flashing red pretty hard. We said, hey, is this just another BTFD opportunity or is it time to get the heck out of the way? And early on, it was all BTFD all the time. I get it because that trade has worked pretty much every time. Then towards the end of the day, I think people were getting a little bit spooked and then that number started to shift. We ended up going out 63.6% say they want to buy that dip and about 36.4% said get the heck out of the way. So if we had continued going red today, I think that number would have been a little bit higher. Wednesday, 7:59 on the tape, so another banger day. The hot option on Wednesday, 42,000 of the Feb 25s, followed by number 2, 36,000 of the Feb 17 puts. Seems like they were selling those for about 17 cents. Wednesday, of course, was a non-farm day. Number 3, 32,000 of the March 25s. Number 4, 28,000 of the March 16 halves. And number 5, 27,000 of the Feb 20s. Tuesday, we're hitting that 750,000 level a lot this week. Tuesday, 743. The big dog, about 40,000 of the Feb 20s. So once again, a very psychologically important strike. Number 2, 33,000 of our old friends, the Feb 15 puts. They have to sneak in there. By the way, if you're wondering, a penny. That was the average price for those bad boys. Number 3, 21,000 of the 18 half puts. Number 4, 19,000 of the 18 half calls. And number 5, about 19,000 as well of the 17 half puts. Maybe we have a put spread versus calls, or maybe even a straddle versus some puts out there. Either way, a lot of action on those strikes on Tuesday. Monday, 8:37 on the tape, so another hot day right out of the gate to kick off the week. The big boy, 78,000 of the Feb 16 puts. We were hanging out at about a 17 handle in the cash at that time. Number 2, 48,000 of the 16 half puts. Number 3, almost 41,000 of the March 25s. Number 4, 28,000 of the Feb 25s. Those were closing, so might have been a bit of a March Feb 25 roll. And number 5, 23,000 of the March 30s. We also asked you about those Feb 16 puts. They were trading for a whopping nickel. We said, is that cheap enough for you to take the flyer? And yeah, about 2/3 of our audience said, yeah, you'll buy some for a nickel. So there you go. 2/3 of you are now the proud owners of some 16 puts going out next week. Mr. Rock Lobster, sir, a wild week in the land of the vol options. Anything catching your eye, sir?
Besides, VIX should be at 6.
Do you have some puts burning a hole in your back pocket again?
But the worst part is the trade I had on. This is a classic. Is I closed the long market side of the trade, and I had all these VIX puts for literally a credit, about a 3-cent credit. And I'm like, no way! I got 2 weeks to go to expiration. There ain't no way I'm not going to be able to sell those for at least a quarter or more in the next 2 weeks. Guess what? I was wrong. So I'm going to take my 3-cent winner, earn about a jillion of the 16. So it's like one of those where, and that's like, for me, a style of trading. Like if I close like one side of my pair and then I make, now I have the other side for free. So I'm going to hold on to it, and try to, see if we can make money on it. But anyway, yeah, I was holding some of those 16. Surprised me if we maybe close 17, but I think 16 with the holiday might be a bridge too far.
And have you nibbled in any of these intra-week 0-day options yet, sir? Or are you still kind of waiting and seeing?
I haven't. My students want me to do some fun calendars and stuff, try to back into some cheapy calls and things like that. So I will trade them. It's just it's mostly just paying attention to them once you have the trade on and not being sidetracked, running those business type things.
I have no idea what that's like.
Yeah, it's like, and I tell my students the same thing. You can only trade what you can manage, right? And even when, we send out alerts and we're very diligent about it, for the most part, it works very well. You still got to be able to get the alert, execute the trade and all that, and not have reality get in the way of your options. A reminder for the listeners.
That pesky reality. Let's see how reality is shaping up in the land of the vol ETP universe, listeners. Out to inverse vol we go. If you've been like a lot of our pro members, if you've been waiting for an opportunity to maybe, dare I say it, re-nibble on good old SVIX, then you had a few opportunities out there, but mostly we pretty much bounced right around the 21 handle or a little bit below it, 20 3/4, somewhere in that level. That seems to be about as low as you're getting. I know it was last week in the big vol spike, some of our pro members were able to get some decent levels off in some SVIX puts in the teens, but it seems like that was a very, very short-lived phenomenon. If you've ever traded SVIX options, they're not exactly the most liquid things in the world, and that is continuing today. Even though the paper is, dare I say it, respectable, they've got 3,300 contracts on the tape already. It doesn't sound like a lot, but the ADV is only 4,300, and that's down 200. So maybe, dare I say it, maybe we can put up 5,000 contracts. How nice would it be, listeners, if SVIX actually had a real viable options market where you could get in and get out? But I digress. On the other side of that coin, UVIX hanging out about exactly a 6, up about 0.15 out there on the week. UVIX doesn't have the same liquidity issues, obviously, putting up about 50,000 contracts a day and already putting up 51,000. Let's see, how high did we get? Got up to about 6 2/3, and that was this morning out there in UVIX. And of course, we got as low as looks like about 540. So if you did that same trade that one of our pro members did this week, where you strategically forgot about Russell's weekend trade, actually, it could have worked out if you got out of it this morning. You were looking not great. UVIX was off about half a buck or close to it by Wednesday. But if you held on to it till today, or even yesterday, you did all right. So if you were diligent in your forgetting, Mark was joking about that last week, Russell, but maybe that is the new way to do it. You put it on Monday, you strategically forget for about 3 days, and then you close it on like a Thursday or Friday. What do you think, sir? Have you? I know we talked about it. Have you worked out that?
I went through what Mark was saying and he was dead on that. What he was picking up on is that midweek spike that we keep getting over and over again. That if you bought it on, I think he said Wednesday to Friday or Tuesday to Friday, something like that, which kind of makes definitely makes sense when you look at what's going on in the market. I only lost 4 cents this past weekend. And before that, it lost 8 cents. So it hasn't, it's bleeding. But if you go back to the weekend of the 16th to the 23rd, to the week of the 23rd, it made almost a buck over the weekend. It was up 98 cents. So, maybe wins 10, 15% of the time, but those winners sure do take out the losers as far as UVIX goes. I thought I had something about SVIX, but I don't know.
Yeah, have you dabbled when we flirted?
I have a quarter of a long position. I haven't even been selling calls against it. I just
you can't be bothered.
It's just more of kind of a dead position.
Yeah, it kind of is. When it's just
I feel like I've got a much better opportunity to get into the rest of it, and part of me thinks I shouldn't own any of it right now. So there. I'm always bearish, but it's just getting worse.
I own none right now. Read into that what you will, sir. I own none.
Yeah, I participated in a roundtable with a bunch of economists over the week on Wednesday, like for 3 hours, and I didn't hear a bullish thing out of any of them. It's if you heard them and you hadn't looked at the stock market, much like we talk about, if you look at what VIX is doing, you wouldn't think the stock market's doing what it is, but the stock market seems to be the outlier right now.
Stock market don't give an F about economists. It's BTFD season. Always has been.
It's a honey badger market.
Yeah. Mr. Rock Lobster, sir, anything going on for you in the world of levered or inverse or any other vol ETPs? Let me just hit the rest really quickly. UVXY, 38 1/4, up about a point, putting up 42,000 contracts today. The ADV is 40,000, so looking pretty spicy there. And VXX at about a 28, up about a third of a point, putting up 31,000 contracts. The ADV is 44,000. I'm sure if I racked that right now, I'd probably be pretty close. Anything catching your eye in the world of vol ETPs, sir?
I think the hardest thing for me to trade right now is just looking at the hard to trade. I'll make it real simple. It's hard to trade the vol ETPs. Normally the money was made on the downside. Yeah. Easy money, fun money. And without zone 1, without the zone of the monk, without that 13, 12 lower quartile of volatility of VIX, they are very unappealing because they kind of hit a floor and never get below it. So haven't seen the zone of the monk since Rolling Stones last toured. Kind of hard for me to get excited about them for the trade.
That's a good way to put it. They're very unappealing right now.
they're just unappealing as a trade, and the markets are fairly wide. Normally, I would say, okay, we're at an 18, like VXX. There's easily downward momentum. I would buy maybe a 27 put. The March 06 27 put is $1.18. The problem is like we get to a 16 VIX day, and then VXX really won't go below 26. Relative where the futures are. Until you get that, yearly in the past, we have seen like 12, 13 VIX for a while, and without it, you don't get the real crushing on those VIX futures that really make those products Anyway, yeah, because I don't think VXX has made like any significant new low in a while. Anyway, I think vol VIX bottomed on December 23rd and has not seen that number since one day.
Very unappealing, says the Rock Lobster. Let's see if our predictions are appealing. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. As we're coming into the end of the show here, we're still seeing mostly a similar setup to where we were at the start of the show. Dow up about 1/3%, S&P up about 0.5%, NASDAQ up about 0.45%, and VIX cash vacillating around that 19.25 to 19.5 level, or excuse me, 19.30 level. So no matter where you have VIX cash right now in the 19s, doesn't matter because we have no 19 handles on our game this week. It was a very tight board last week. I was on the upside at 18.35. I did the rare thing. I kept myself at the same level I don't like doing that normally, but no joy for me. Of course, this is one of those weeks where we were all right at least once. Mr. Rhoads, I should say Gretchen, was at an 18.02, and the meatball was at a 17.71. So no joy for any of us on the board, not even the right handle this week. So not a great one. Not a great showing for us here on the show. Maybe some of our listeners had better luck. I'll have our producers check and see if we had any grand prize winners out there this week. But that means, Mr. Rock Lobster, you get to go first because you weren't on the show last week. You didn't get a chance to lose like the rest of us. What are you feeling for this time next week, sir?
No, I think a small drop in volatility, but not much because of this churn going on with the Mag 7. I'm going to say 17.25.
17.25, says the Rock Lobster. And if folks want to say more stuff to you, they want to check out what you got cooking, maybe they, dare I say it, want to be flashed 5, 7, or 9 times in the alley of their choosing, where should they go? What should they do?
OptionPit.com, 888-TRADE-01. We trade all our own trades at OptionPit. Crazy option service where you actually do the trades. I know. Who knew? Who thought it could happen? 15 years of happening. Anyway, there you go, optionpit.com. Thank you very much, Russell. Mark, have a good week.
I see Russell asking for your zones. You don't credit who named the zone of the month, though. That was me.
I know. I well, as usual, I just steal your good names and then pawn them off as
because nothing fun happens in the zone of the monk.
Nothing fun happens in the zone of the monk, and then there's the danger zone where everybody's hiding under their desk. We know no different. So we only know the two.
He came up with the ultimate levels, and I came up with the branding around it there. So there we go. Listen, it was the twofer, even though my zones were surprisingly similar to his at the end of the day, which is, again, you can always tell a genius. He thinks exactly like you. But check him out over there, optionpit.com, if you'd like to learn more, listeners. All right, Mr. Rhoads / Gretchen, I'll let you choose. Do you want to go next or last?
Oh, I've done my calculations, so I will blurt out 1881.
1881, an interesting year. Is it an interesting vol prognostication? We don't know yet, listeners. Like I said, we're hanging out right now. Vol ticking up a little bit more in 1942, a terrible year. I'm gonna say, you know what? I don't know. I got a little bit longer term VIX puts in my back pockets. I wouldn't be mad at some downside coming up, but I don't know. I feel a little spice back in the game. I'm going to say an interesting year, 1955, 19 double is my. So, wow, we got a wide board this week, listeners. 17.25 on the downside for the Rock Lobster. Mr. Dr. VIX / Gretchen coming in at the 1881 level. And then me playing the upside fiend that I am these days. 1955. All right, listeners, that is going to do it for us on the old Volatility Views program this week. Remember to check out our friends over there, tastytrade.com/podcasts. All the brokers love all the listeners, but all of them really love the Vol Views crowd. So head on over there, see what special deals and offers and tools they have for you Vol Views listeners, tastytrade.com/podcasts. And of course, get over there to the Pro right now. While you're listening to this, get over there to the Pro, theoptionsinsider.com/pro. Trust me, you want to be there for this one. And you know what? It sounds like we have a special guest referee in the offing, so it's going to be even more fun next week on the Vol Deathmatch. Mr. Rhoads, you have volunteered yourself into the fray once again, sir. Are you a little bit concerned?
No, not in the least. Not in the least. I know these two guys.
Make sure you wear something that you could wash. If it gets covered in blood, it won't be ruined, sir.
Mm-hmm. Well, I can take these guys. I know that.
All right. Well, you're supposed to be impartial. You're going to be a special guest referee, so we'll see. But listeners, if you too want to submit topics, you want to play along, you want to listen along, and of course you want to hear it, and of course, maybe if you're fun, you could even see it, and of course, if you want to help determine the winner, theoptionsinsider.com/pro. The clock is ticking. Stay tuned to our Twitter for all sorts of fun AI artwork coming soon. If you got it on the email already, but now it's going out soon. So stay tuned for that. It wouldn't be a Vol Deathmatch without a little bit of fun. Speaking of fun, we'll be back instantaneously for all the pro folks. I know we had a lot of crazy trades flying fast and furious this week. We'll break it all down on the official after party of Volatility Views, known as Options Oddities. Yet another thing you folks get if you come on in for the Vol Deathmatch. You can stay for Options Oddities. And then, of course, we wrap it all up on the day with the Hot Options Report. No shows on Monday, obviously, so the next time we talk to you, it will be Vol Deathmatch time, so gear up, listeners. Should be a good one. Have a great long weekend. We'll see you here for the Vol Deathmatch next week, and then back again another episode of Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.